Warren Buffett and Berkshire Hathaway have bought a completely new position in their portfolio. By the way, it's Warren Buffett, two F's, two T's, not Warren Buffet. Just so we're clear. They bought a completely new position. Of course, we know that they sold 49% of their Apple position. Apple is still by far the number one portfolio. But a company that they did add in the portfolio is a company we've talked about in the past. It's this stock that was down quite a lot this year. It's Ulta Beauty. Ulta Beauty at the time of making this video is down 32.8%. But after hours, the stock did jump 13.81% after the news broke out that, well, Warren Buffett, Berkshire Hathaway took a position in that company. Now, does that mean that suddenly the business is 13.8% better? No. Just means that Warren Buffett bought the stock and that's how the market works. Other than that, nothing has changed, right? Yes, market cap is now up 13.8%, but forward PE still around 13 times, EV to sales 1.5 times, and the analyst expectations won't change, right? Just because Warren Buffett, Berkshire Hathaway bought a position, opened a position, should I say, in Ulta Beauty does not mean that suddenly you're going to see, oh, sales expectations are going to go up from 3% to 5%. No, all of these numbers right here are going to stay the same. But I wanted to make a video on Ulta this week. I did not know Warren Buffett, Berkshire Hathaway were going to, well, announce that they opened up a position in Ulta Beauty. So here we are. Let's go over Ulta Beauty, the stock and the company. Why is it down? Why this might actually be a good Warren Buffett stock. So if you're interested in hearing that, sit back, relax, hit all the buttons, like, subscribe. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's first start with the big thing here. Ulta Beauty is a company that generates quite a lot of free cash flow and has been buying a lot of shares in the last 10 years. In the last 10 years, shares outstanding have been reduced by 25%. As for some valuation metrics, if you look at forward PE, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth, you can see that compared to its 5-year mean, we're well beneath it. Price earnings to growth sits at 1.82, which is a bit high-ish for a stock like Ulta Beauty. But all the rest here look quite cheap. Yes, it's true, it's not a high growth stock, but it's a stock that does return value to shareholder over a long period of time. And again, as we've been saying in the last couple of videos, it's much better to buy a stock when margins are low or at least close to the bottom. It's much better to buy a company where EPS has been hit, but in a quarter or two, it will recover. Why is that? Well, because you don't want to start buying stocks at peak margins, at peak earnings. It's much better to buy good companies where margins, earnings have already taken a hit, because then you know, oh, okay, when it will recover, the stock will react accordingly. Now, if we look at the global cosmetics market insight forecast to 2023, the global cosmetics market size was valued at $426.4 billion in 2023. It will be growing at a CAGR of 6.88% from 2023 to 2033. The worldwide cosmetic market size is expected to reach $829.2 billion by 2033. North America is expected to grow the fastest during the forecast period, and Ulta is not operating outside of the United States just yet. Plus, just ask yourself this question, right? Are women going to go away? No. Are they going to stop buying makeup cosmetics? No. So is a good company like Ulta going to be here for quite a long time? Yes. Yes, it's true. There is competition. There is the likes of Amazon. It's true. They need to maybe come with something new. Yes, that's why the stock is down right now. So let's have a look at what they reported in the last quarter. So last quarter, revenue came in at $2.72 billion, up from $2.63 billion same quarter last year. Comparable sales increased 1.6% compared to 9.3% in the same quarter last year. And then here is the problem, right? A hit in gross profit. Gross profit is down year over year. Operating income went from 16.8% to just 14.7%. They say here The Ulta Beauty team delivered net sales growth of 3.5% and comparable sales growth of 1.6% in a dynamic operating environment. I am proud of how our teams continue to execute our transformational agenda, adapt to a rapidly evolving marketplace, and thoughtfully manage expenses across the enterprise. We have a clear plan to accelerate our momentum and continue to deliver a best-in-class assortment and engaging experiences for our guests. I remain confident in our differentiated model, the resilience of the beauty category, and our ability to execute against our plans, but we have adjusted our annual guidance as we anticipate the dynamics we face in the first quarter to continue for the balance of the year. And so if we scroll down, by the way, they did again repurchase some shares in the quarter, so that continues. So updated fiscal year 2024 outlook. Net sales previously to come in between $11.7 to $11.8 billion, now $11.5 to $11.6 billion. Comparable sales previously 4% to 5%, now 2 to 3%. As for net new stores, no changes there. There is again a change here in operating margin. It's lower, now 13.7% to 14%. Diluted earnings per share obviously also lowered, $25.20 to $26. So yeah, profitability side of things, margins are taking a hit. With that, we've got some analyst commentary here. So Piper Sandler is moving to the sidelines on Ulta Beauty, downgrading the stock to neutral from overweight, as the cosmetics retailer will likely see further erosion in its profit margin due to shrinkage, increased promotions, and slower sales. Increased competition from Sephora's collaboration with Kohl's and Amazon's new beauty offering is also weighing on Ulta's revenue outlook, leading Piper's analysts to trim her sales and EPS estimates for fiscal year 2024 and 2025. We believe a rather lackluster long-range plan come October Investor Day is probable, which could leave shares range-bound. She added that her downgrade is not a call to sell into the fiscal Q2 print or the October Investor Day, but a view that it might take beyond the next 12 months to get share reignited. Of course, now that Warren Buffett took a stake, the stock is of course up, but like I said, the business does not change. Ulta has been pulling on traffic drivers to increase sales through promotions. At the same time, loyalty memberships for Ulta have slowed. Meanwhile, Sephora and Amazon are beefing up their presence in the category with a significant increase in brick-and-mortar stores and expanded online offerings. The increase in promotions by Ulta signals to the analysts that things may be becoming more challenging for Ulta, while the same doesn't seem to be true for its main rival, Sephora. Sephora is also a bit more of a premium brand. Now, the analyst did trim her price target by 18% to $404, a 4% upside to, well, back then I believe that was end of July's closing price. Right now, the average analyst price target sits 41% higher than the price we're at today at $465.55. We've got 30 analysts covering this company, 15 have a hold rating, 13 buy. Now, to conclude, looking at the graph, of course, we can see here the double top followed by a big downtrend. Now, with the Warren Buffett taking a position in Ulta, the stock did go up quite significantly now at the 50-day moving average, $375. The 20-day one sits at $351 and the 200-day one at $423. So yeah, it was, of course, oversold on the weekly here at $320 or so. But now with that bump, we're not going to be oversold anymore. So overall, okay, great. The stock is up 13% because Warren Buffett, Berkshire Hathaway took a position in Ulta. But for long-term investors, you want to see improvements in the business. It's great that a legendary investor has bought that stock, but nothing changes for the business. And that's the most important part here. It's great to see your position now maybe in the green or maybe less in the red, but what you want to see is margins improve, sales improve. It's probably not going to happen in the next quarters, but keep that in mind. A super investor buying into this company does not change the business, at least not in the short term. Maybe if they become activists, I highly doubt that will be the case, but if they do, then yes, then maybe things can change. So overall, that's about it for this video. I can understand why they're buying something like Ulta. It is a great business. It is a great business, has returned value to shareholders for many, many years. Now, of course, it remains to be seen if they can do it in the future as well. So that's about it from me in this video. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.